You may have heard of people talking about buying the S&P 500, aka the stock market, and getting 8 to 10% returns based on historical averages. But how do you actually invest in the S&P 500? In today's video, we're talking about 4 different ETFs that you can choose from, and then some of the pros and cons for each one. The first one is ticker symbol SPY, known as the Spiders, and this is the most liquid and highest in total assets of all 4 options. This is great if you're looking to trade options. It's also decent to hold in terms of just buying an ETF. The one downside is that the expense ratio is 0.09%. Doesn't seem very high, but it will make sense when we're looking at these 2 other options, IVV and VU. Both of these are pretty similar, but the reason I bring them up is because it's just a different provider. IVV is BlackRock, VU is Vanguard, but both of these have both very low expense ratios, 0.03% for IVV, the exact same expense ratio for VU. Last one is SPLG, and the difference with this one compared to the others is it trades at a much smaller share price. It's a lot easier to use options trading strategies like the wheel just because the price is lower. Personally, I use SPY for any options trading, VU for anything that I want to buy and hold long term, and then SPLG I also use only really related to options trading.